Our first speaker is a very well-known and well-followed commodity commentator. He generously shares his years of investment market experience in resources and commodities via the Dawes Points blog and also on his Twitter account. If you're not a subscriber, then you should make sure that you subscribe. To help us better understand the outlook for copper, would you please welcome the Executive Chairman of Martin Place Securities, Barry Dawes.
Thanks, Andrew. Martin Place Securities has been around since 2000, and it had a very exciting decade for the first decade of this century. The second was a bit slow, as you know. We had a few interruptions, but we're getting our act together again, and we're looking at the world-famous Dawes Points Global Boom trademark. Now, I've been talking about the Dawes Points Global Boom for about 4 or 5 years. It's happening. It's been going for some time, and people just don't recognise it. And I'll get onto that in a minute. Anyway, knowledge. I know a lot about a lot. Commodities, companies, geology, and whatever, because that's what I've done and that's what I love. Experience. I've been around for 40-odd years doing all this sort of stuff. And vision. We're always looking at the future, looking at the opportunities, and see how we develop them. So, an outlook for copper, a decade of opportunity. So many things out there and so much excitement, and the people in the industry are the bit that I find best of all, because the geotechnicians who are entrepreneurs are finding things, doing things, making things happen, and it's very exciting. Disclaimer, whatever that means. So, copper. It's really interesting. It's a key metal. It's number 3 by tonnage. We've got steel, which is about 1,600 million tonnes, and then we've got aluminium, which is about 68 million tonnes per annum, and then copper is number 3 with 23 million tonnes. Now, this is an extraordinary amount of metal that gets consumed and produced every year. Now, the other thing that I like about copper is that we've got a history to it. Some metals are Johnny-come-latelys, and so they don't have that much of a history. But for copper, we have a lot of data, and we can look at it in the longer term. The long-term growth rate in copper consumption is about 3.35% since 1900, and it's remarkably consistent. And what we've seen just in the last little while is an acceleration on that, believe it or not. It's a most versatile metal. It's used just everywhere. Motor vehicles, in the kitchen, in industry, here, in all our technology, a great conductor of electricity. And it's critical in all economies, and particularly as we're seeing more and more of the energy provided in economies through electricity. And so the transmission lines become really important, all the electric motors become important, and the demand for copper keeps growing at that 3.35%. This is this fabulous chart on mine production. Now, this goes back to 1900, courtesy of the International Copper Study Group, and it's growing a little less quickly than consumption, but there's a reason for that. There's secondary material which comes into it, but at the same time, there's something that's going to come from this lower growth rate, which is called supply problem. So, production. We need to know and understand that most copper mine production comes from the Americas and Africa, and that's going to continue. It'll become more and more important. And refined production is mostly in East Asia. That is mostly China, Japan and South Korea. Other players are primarily suppliers of concentrates. Most of the copper comes from porphyry coppers. And those people who know porphyry coppers generally means relatively low grade ore, and these are becoming more and more significant, and hence we're finding that the grade of your new mine is lower. Now that means some other things which we'll talk about very soon. And the global market therefore is mostly in concentrates and not in metal. So supply side is critical for the next decade. Now, talking about those numbers and sort of looking at them, you can see that Chile is a big producer of concentrates, a little bit of smelter material, and a little refined copper, including SXEW. Peru, almost all concentrates. China is an important mine producer, but you can see that it's the key for copper metal production. USA is important, again, in terms of concentrates. Australia, we're primarily an exporter of concentrates, a little bit of metal out of Mount Isa or Townsville, and Olympic Dam. Congo, really very, very important. Zambia, and Japan is there on the smelting and refining, along with South Korea. So in terms of supply side, what we've got to think about is we've got a really high mine capacity utilisation rate. And that means that there's less flexibility for increasing supply. And it's going to be with us, it's a structural issue, it's going to be with us for at least 10 years, maybe beyond that. There's relatively few new major projects coming through. And when you think 3% on 23 million tonnes, it's basically 750,000 tonnes of extra copper every single year is required, which is about almost an Escondida, which is the world's biggest copper mine. So we're going to have this structural problem for quite some time. And the other thing, reliance on old mines. Some great work was put out by Freeport just recently, and I'll show you that, showing that many of the mines that are important producers at the moment were found in the 1880s or the 1800s. And they're still trudging along, but they provide a very important part of the whole marketplace. Those declining ore grades that I mentioned, and the other thing that we talk about, as grades go down, you've got to crush the rock more and more, so the comminution costs are rising, particularly at a time when the oil prices are rising. And we've got some labour issues, but geopolitical risk is really increasing, particularly when we get more and more copper from Africa, and we still have our little problems in South America every now and again. So, the world-leading producers, Codelco's biggest, Freeport, Glencore, BHP, Rio, First Con, Antofagasta, Vale, all those names should be familiar, but you can see that it's a game for big players. Some stuff come from Glencore. It's really worth looking at what Glencore is doing as a company and looking at its strategies versus BHP or Rio or Vale's. And Glencore makes a big issue about how its strategy is different. So it's really worthwhile looking at it. But they make the point that the pipeline has more than halved, and so the copper price has got to go much higher as we go forward. And a lot of the exploration that's been underway hasn't been all that successful. However, here in Australia, we've got some guys that are doing some great work, and I think we're going to find quite a lot of copper, not quite maybe an Escondida or a Chuquicamata, but we'll see more. Now, this is the stuff that Freeport was putting out. Escondida, that's the most recent important one, really, 1881. 1981. This one's 1880. We've got a 1926, a 1910, Chuquicamata 1910, Cerro Verde in the 1860s, and these things are still producing today, a very important part of production. So we're not finding those really big mines, although obviously Oyu Tolgoi is very important. This is the decline in the average grade. It's not because the mines are getting worse or anything, it's just basically as we need more and more copper, it can only come from lower grade ores. We've got supply side, we've got a whole bunch of labour renegotiations coming through, particularly in South America, and I think that's going to have an impact on the way the copper price goes. Long-term consumption, there's a 3.35%, just fabulous. It's and it's accelerating. Asia is now 65% of the total copper consumption, and as I said, electrification is just embracing everything. Construction of smart homes and buildings. More and more of our energy is produced from electricity. Electric motors are everywhere, and electric vehicles might provide an additional thing. In terms of consumption, 49% of this is China, and by the time we throw in the rest of Asia, you can see how really important, these things. If these things are growing at 5 or 6% per annum, and they are still doing that, you can see why we can get 3.35% in consumption. Population growth, this is quite amazing. This little system basically says that the world by 2030 is going to have an extra 800 million people, and these are the people who are going to be using copper. The demand side is very robust. By sector, this is from the study group. I don't know how the hell they've broken it down into, equipment, construction, infrastructure. I mean, so many things like that seem to overlap each other, but they're the categories that they've given us. Now, Glencore put some great numbers out on the potential increase in demand for copper from electric vehicles, just from the generation and storage and infrastructure, as well as the vehicles themselves. So it's all going to help copper. Net result of supply and demand is deficits, and deficits just get worse. So I know that the intrepid and entrepreneurial geoscientists in Australia and elsewhere will find it, but we ain't got it there yet, and the long lead times are very important. No inventories. This is LME divided by annualised consumption, and you can see it's less than half a week. Consumption's going up, no inventory. Now there's a bit on the Shanghai and there's a bit on COMEX, but it's trivial. Now copper in Australia, we've got some really interesting things happening. We've got regional targets. I mean, we're sort of looking around Mount Isa, and we're looking around Olympic Dam, and we're starting to see other things found in South Australia. But what we're really finding is that the geological targets are changing. The experience amongst the geologists is showing that we're finding copper in places that you might not have thought otherwise. Australia's an exporter of concentrates. We're expanding in most states, but do keep in mind with our targets, we've really only got 68% of Australia still under cover. When I sort of put these numbers together, everyone thinks in terms of, we've got Mount Isa, and that's a big producer of copper, and we've got Cadia Ridgeway with Newcrest, and then we've got Olympic Dam. But by the time you throw Prominent Hill and DeGrussa, Golden Grove, and some other things happening in Western Australia, it's amazing how the reliance on one state for copper has just disappeared. So, if we start talking in terms of targets, in Australia we've got porphyry copper, really important in New South Wales. In the Cobalt Basin we've got particular styles of mineralisation. We've got VMS, and we've also got something quite intriguing happening at Broken Hill with Silver City, and I wish them well with that. In South Australia, we've got Olympic Dam, Prominent Hill, Carrapateena, Hillside, Kanmantoo. 15 minutes is not enough. In Australia, we've got the SEDEX deposits of Mount Isa and Walford Creek. That's a really interesting project developing there. And IOCGs for Ernest Henry and Rocklands whenever they get relisted. Western Australia, Telfer, Boddington, co-products of gold production, Golden Grove, DeGrussa, and a lot of stuff going on in the Telfer region. We're going to hear a lot more about that, I think, over the next little while. Copper, bull market. Those who follow Dawes points would have noticed where we gave a great buy signal here, and said, well, it's going up there, and it's continuing to do what we thought it might do. So it's going up. So the next 10 years, deficit supply, growing demand, that ain't going to go away. Old mines and rising costs are putting pressure on supply, limited new projects, and we've got to think too that the Belt Road supply out of Mongolia and the various Kazakhstans and whatever might actually provide some more copper, so keep watching that too. Now, so the sector is underweight in all portfolios, it really is. I look right across the board and we're at $2,200 billion plus in superannuation funds, and they're all underweight, let me tell you. In Australia, we've got many players, many stages, explorers, developers, and people, I don't think, really understand the exploration potential. So, give me a call, follow me on Twitter, log on to Dawes Points, and most things we've said, strong bull market in equities, peaking in the bond market, flow of capital out of bonds into equities and commodities, and the gold price is going to be very, very strong along with other commodities. It's all been stated, and I haven't had to change my view at all over the last 4 years, and it's all happening. So, and finally, we are here. Disbelief. The first leg was really disbelief because no one participated. Then we got some pessimism into 2008. We had a little rally, hope rally in 2011, then to despair. But we've come up and we've broken that downtrend. We've got these massive head and shoulder reversal patterns in all the major indices and the big stocks. We're on our way. We've got at least 10 years of bull market, and it's Dawes Point's global boom trademark. Thank you very much.